Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, December the 8th. The year's 2021. Let's talk trading. Keeping it simple. Range. These videos are for educational purposes only. Your results may differ from mine. Range. What is range? Well, one way we calculate range is we take the high price of the time period or chart period. We take the low price and subtract it from the high price, and we get a number. We call that the range. That's basically how the distance between the high and the low price of the day, of the week, of the month, of the hour, of the minute. Why is that important? Well, price moves, it changes. The price constantly goes up and down, right? Well, if you look at how far price moves over a time period, then you can start to run statistics. So let's just jump right into it so you can understand what I'm talking about. Once again, this is pretty simple. So I'm looking at the daily chart, and I'm looking at high minus low or range. And just so you know what indicators I'm using here on this chart, I added the TRO 2021 frequency distribution display UI. That means user input. So you can change these numbers. When I first made it, I made it fixed, but then since I'm a programmer, anything that the user might want to change, make it an input. That way, as a programmer, I don't have to go back in and change the code. So I made it as flexible as possible. So we look at the range here. And you can see there's the daily high, there's the daily low. It moved. And we're going to look at it for the last 100 bars. And when you look at it, you can see from yesterday basically was an outside bar the previous day, which was an inside bar. So for an outside bar to occur, the range has to be larger than the previous range. And for an inside bar to occur, the range has to be smaller than the previous bar's range. That's something that a lot of people don't think about. So how can we use range to our advantage? Well, when price open, it's going to range. And so it went up a certain number of pips from the top of this candle or open to the high. Then it came back down. Well, this distance wasn't enough for it to be a daily range. What do I mean by that? You can see 100% of the time, daily range is above 30. This is a cumulative frequency distribution. 99% of the time, it's greater than 40. 94% of the time, it's greater than 50. 81% of the time, greater than 60. 66% of the time, greater than 70. Now, these are not probabilities. This is statistics. Statistics deal with history. Probability deals with the future. There are no probabilities in trading. There's maybe you could say statistically this is what should happen, but it's not a probability. The math is the same, but the data set's different. So we know price is going to range from the open, and that's the reason I created the buy zone. So if we go back, let's see, let me find the buy zone. Somebody said it'd be nice if you could label these, and it really would be. So price open, it ranged down, it ranged up, still not enough range for the day, and then it came back down, came up, still not enough range, and then it just tanked. Now we've got enough range for the day. Because if you look between here and here, It looks like we're about at either 99 or 100 pips. And if we go back one chart, yep, we're right at 100 range for today. So using the buy zone and range, that's one way. Now, how about we can also use the wick zone and the range. So we know when we looked at the chart, when price hit the previous day's low, there still wasn't enough range really. It was about, let's see, we got a 62 and a 08, that makes 54. Well, chance of it being greater than 60 is 81% of the time. So if you took this trade, let's just say statistically, you had 4 out of 5 chance of winning. Statistically. So if you took that short, you would have been rewarded. So from 08 all the way down to 3160, that's what, 68 or rather 40, 48 pips. That wouldn't have been a bad trade at all. So that's another way you can use range. So when you get to a breakout point, the previous candle's high and low, and you look at the range of the current candle, you can determine whether or not there's room for it to move. And we can even move up a time frame to the weekly. Now, this is where the user inputs come in handy, because you can see here, greater than 100, 1 out of 100 times it wasn't greater than 100 on the weekly. So, okay, frequency distribution, edit. And this is where you can put in where these levels start. So if I wanted to, I could say, let's do 200, 150, $100. So now you can see greater than 100, 99%, greater than 150, 86, and greater than 200, 62. So that's almost 2 years worth of data on the weekly. So when it hit this level, 94 pips. So for the week, we had a high of 3288. And so when it was down to, say, 3200, that was 88 pips. Add another 6, makes it 94, greater than 100% or 99%. So when it hit this level, you were probably looking at a good chance that it was going to break it and break it by a few more pips. And once again, you would have been rewarded from a short at 94 all the way down to 60, 34 pip opportunity. And let's take one more look. Let's move it up once again to the monthly. And let's just go back in and change. Let's do, since this is monthly, whoops. Let's make this 500. 400, 300, 200, and 100. So, chance that it's going to be bigger than 200 pips, 99%. So we had a high of So far this month, 33.51. And the monthly low of this month, for some strange reason, I can't seem to get that number. Let's switch back to the week. So the monthly low was 31.94. So at 33.51, we'd already gone about 250 pips, but once again, 300, you've got a chance, a 90 or 94% chance, it looks like, statistically speaking, for it to go over 300. Once again, it would have been easy to take that trade, put your stop loss in place, and say it looks like the market will smile upon me based on statistics. So you can see we're 151 pips off the high. So if you look at that range for the month, it's only 190 pips. Well, what this is telling me is chances are there's more room for it to move. And that's just using the one simple calculation, high minus low, looking at it, how far has it moved? What's the chance it's going to move, say, to the next step? However you put these steps in. And you can see that you can figure out your quote-unquote odds of having a winning trade. Does it work every time? Of course not, because these videos are for educational purposes only, and your results may differ from mine. But this is just a simple way of using horizontal lines to your advantage and taking advantage of the range. So let me go in here, hit the reset button, put this option back to low. And as you can see here, let me just show you that you can run this on a lot of different levels, high, low, top, mid, previous for the same, all of your pivot points. Well, you can put in a fixed price, you can do current price, you can do fibs, previous fibs, moving average. It's up to you, the user. And of course, you can change how many bars you want to look at. So for the hour, you can see here where chances of the hour being greater than 10 pips, 72%, 7 out of 10 times or better. And if you've been watching my videos, you can see the smart ranges tells you where it is in the percentiles. So if you have 100, it says, okay, 50 times it was below or 50 times it was above in this case. Where is the 10? How many times did we hit 10? Actually, the mode was 9 pips. We had 9 bars of 9 pips out of the last 100 bars. So if you understand statistics, this indicator can be really helpful. And if you don't understand statistics, that's okay too. Just know that price has to range. It will range. Chances are it's going to break the high or low of the previous candle. Doesn't have to break it by much, but usually it does. Otherwise, you get an inside bar, and you can see how infrequent that is. So, fellow traders, in keeping with keeping it simple, I hope you understand. If not, feel free to ask questions, and I will try to answer them. And in the meantime, when you're at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.